Hello, this is Alex from ONG Tax and Accounting Services. So in this video, we're going to talk about Form 1042S. So chances are that if you're watching this video, you've received this form and you want to know whether you have to file any tax return or you just need to keep this form for your records or what's happening. All right. So this video is going to help explain certain key issues that needs to be dealt with when you receive this form. To start off, let me throw a word of caution out there that this video is for educational purposes only. It is not meant to be a legal or tax advice, and if at any point in time you need a legal or tax advice, you should always consult with a competent tax attorney, a CPA, or an enrolled agent who can be able to listen to your situation and help you out. Okay. Now, a lot of the time when you get 1042S, it means that the person or the entity that paid you the type of income that's being reported in box 1 and 2 have determined that you are a foreign person, you're not a US person, based on the W8BEN form or the BENE form that you completed. So that form tells, the US payer that you're a foreign person. It tells them the type, the kind of, the country that you come from or your country of permanent residency. And then also, if you're claiming a treaty, you must properly state the type of treaty that you're claiming and the type of income for which that treaty needs to be applied. So we're going to use some practical example of these forms that has been received. And I have 3 countries that I'm going to take a look at and the type of income that the taxpayer received and how it was reported. And then also help you understand how, the meaning of some of these boxes that you see on 1042S. We also help you understand whether when you receive this form, whether you're required to file a 1040NR or file a 1120F for foreign corporation. So we'll take a look at all of those important questions and then let you, decide from there. The first one we're going to take a look at is this taxpayer who is from Brazil. Okay, so on the 1042S, each country has its own unique code that the IRS assigns. And so when you see BR, that is Brazil, and 13B. Now, okay, so we understand that this taxpayer comes from Brazil and the income code that's being reported is 06. Okay, now these forms, when it's given to you, they are very helpful because if you scroll all the way down, the form actually have its own instructions and manuals to tell you what the types of income that you're receiving, and if there's any exemption, it also tells you the exemptions that's being claimed. Okay, so we start with box 1. Okay, box 1 here, it says that the income code is 6. The recipient of the payment comes from Brazil. Okay, and then it also tells us that there's a tax rate of 30%. So first question we need to ask yourself is, what type of income is this, and based on what code or based on what rule is the payer or the person that's paying this money taking out 30% from this person's payment? So we go all the way down. Within your forms, you would see that there's explanation of the codes. Okay, so in box 1, if you see code 6, okay, usually they've labeled it based on the category of income. So you see interest, dividend, other type of income. But here we're finding, when we go to box 1, we're trying to find what code 06 represents. Okay, when you go down here, you could see that under box 1, income codes, you have 06, which is dividends paid by a US corporation. So this actually tells us that this Brazilian resident or taxpayer received dividend income. Okay, and the tax rate is 30%. Now, why is the tax rate 30%? The US tax code says that if a foreign person or a non-resident alien is being paid a specific types of income, which is generally the FDAP income, okay, it is subject to 30% withholding unless there's a treaty that overrides the 30% withholding. So in this case, you have this taxpayer that was paid $5,000 in dividends, okay, but then because Brazil does not have a tax treaty with the US, this person is subject to 30% withholding. Okay, so the payer took out 1,500. So when you multiply 30% by 5,000 in box 2 here, you get 1,500. And that's why you see this over here. Okay, now the question is, fine, I'm from Brazil, I got dividends, and then 30% was withheld, and I'm being sent this form. Should I report this form on 1040 NR? The simple answer is no. Once you receive this form and the proper taxes has been withheld, you've paid your final taxes, you're done. There's no need to file any tax return, okay? Unless there's some other income that we don't know about, or there's some other income that is effectively connected to US trade or business that you need to file your taxes and report and pay income taxes on it. Or there's some other FDAP income for which proper withholding was not done. Okay, but assuming this is the only income you received in the US, you're from Brazil, you got dividends, and the proper tax is withheld, and if this is all that you got and this is all the income you earn in the US, then case is closed. You don't have to file any tax return. By this form, you have actually fulfilled your final tax obligation for the specific tax year. So there's no need to file a 1040 NR. Nothing to do. Okay, so let's move on to the next country. The same as the one we looked at when we looked at the Brazil form, but in this case, the taxpayer is from Mexico. Okay, so taxpayer was paid the same amount of money, 5,000. It says the income code is 06, which we've determined through the instructions, or if you scroll down, we determined that 06 is dividends paid by US corporations. Okay, so then again, you look at the income code, which is dividend, you look at the gross income that was paid, and then you look at the withholding. Okay, when we looked at the Brazilian 1042S, for the Brazilian resident, that person got 30% withholding, and the reason was that Brazil does not have a tax treaty with the US. Okay, so they get the statutory flat 30% rate regardless. Okay, now this person here is a different situation because this person is from Mexico, and Mexico have a tax treaty with the US, and based on the tax treaty with the US, the law says that US, anytime you're paying a Mexican, an individual, you're paying an individual a dividend, you need to withhold 10%. So the US person will withhold 10% and pay it to the IRS. So 10% of the 5,000 is going to be 500. Okay. And so again, all right. So to summarize, this taxpayer is from Mexico, got dividend income of 5,000, and then there was 10% withheld. Okay. So the payer withheld 500. And so that's why you see 500 here. Now, someone will ask, okay, you're saying that when a US person is paying dividend income to a Mexican resident, then 10% should be withheld. And where in the treaty can I find out 10%? So I'm going to go ahead and show you the treaty table that most of the time you should be using to cross-reference or cross-check to see whether the payer did the proper withholding. Okay, so if you want to know, if you get a 1042S and you come from a treaty country and taxes has been withheld and certain percentage has been provided, you also want to do the due diligence to figure out whether the proper taxes was withheld. Okay, so what you can do is you go to Google, okay, and then type in tax treaty table, and then there's some of these things is going to show up to you. And then I will click table 1. Okay, so table 1 is going to show you, well, we got error here, but let me see, tax treaty tables. So you could click the first one. When you click on the first one, it will take you to this table. So tax table on income other than personal service income. So this means that tax treaty tax rates on income that is not personal service income. So that could be what we're looking for. Okay, so the table opens up for you and you can see all the types of income. okay, and then the treaty provisions, and then also the percentage of withholding that needs to be done. Now, we were looking at Mexico, so let's go all the way down to under dividend, which is code 6, income code 6, and you can even see it from here, okay? So income code 6, which is dividend, code 6 is income, dividend income that's paid to individuals, okay? And then code 7 is the dividend income that's paid to corporations, foreign corporations that have direct, ownership in the company. Usually it's 10% or more. If you have a corporation that has 10% or more ownership in the company that's paying the dividend, then they are considered to be direct dividends. And so that's why they have a much lower dividend withholding rate than an individual receiving dividends. Okay, so sometimes when people come to us and we advise them on entity structures or structures that you can use to hold US corporations, sometimes it makes sense to have a foreign corporation own a US corporation instead of an individual. If your intention is to reduce taxes on the dividend income, then it makes sense for a foreign corporation to be the owner of a US corporation so that a dividend rate can go down. And this also applies if you come from a treaty country, okay? So what I'm saying, it might be a bit confusing, but I will use the Mexico example and show you, okay? Also, let's see. So we go to dividend and then we look for Mexico under the countries here. So let's see. Okay, so we got Mexico here, MX, which is the country code, okay? And then we go to code 6. Let's see, code 6, dividend. Here we go. My heart almost jumped out because I thought it was 15%, but it's not. Okay, so it's here. So that confirms the form that I'm seeing. Okay, so you have Mexico, okay? And it says that if you're an individual receiving dividend from US sources, the payer should withhold 10%, okay? If the recipient is a corporation that owns more than 10%, 10% or more of the company that's paying the dividend, then it's 5%, okay? Now, where did we get this information from? When you go to the footnotes down here, it will tell you, what you need to do to qualify for direct dividend rate. And direct dividend rate applies to corporations, not persons, okay? So you take the Mexico example, according to Article 10.2 under the second protocol, okay? Under protocol, it is withholding rate is 10% if you're an individual. So that kind of confirms what we're looking at here. Okay, so that confirms it. You have 10%, you have country code to be Mexico, you have income code to be 6, okay, and 10% was withheld. Okay, so that brings us to the final question. Recipient from Mexico need to do any other thing? Need to file a 1040 now? No. By doing this withholding here, assuming this is the only income they are receiving from the US and this is the only form they are getting from the US, then they've paid their final taxes, okay? And they do not need to file a 1040 now. Okay, so in this case, 5,000 was the gross income, but then there was a 10% dividend withholding rate based on the tax treaty. They paid 500 in taxes, which the payer deducted before paying the rest of the money. So in this case, the Mexican resident is not even going to receive the full 5,000. He's just going to receive the difference. Okay, the 5,000 minus the tax withholding. So the difference is 4,500 or 4,500. Okay, so I hope this makes sense. All right, so we're still staying within Mexico. Okay, and then we're looking at another type of income, which is 01, income code 01. Now, if you want to know income code 01, you do the same research procedure that we used at first. Income code 01 is interest paid by US obligors. Okay, so if you're receiving interest income from US, generally it is not taxable to a foreign person unless it's direct lending. So when they do this payment, okay, if you're doing direct lending, usually they withhold taxes. But if it's just interest that's coming out from brokerages to savings account and all of that, those are not taxable. So it's really important that you know the distinction between portfolio interest income and then direct lending. Okay, so you have 01, which is interest income. Gross income of 5,000 was paid, and then it says 0%. Okay, 0%, and then it gives, usually when you see 0, you should see an exemption code, okay, on 3A, because the general rule is that there should be a withholding. Even if it's lesser than 30%, there should be a withholding. So if there's no withholding and it's 0, then they need to provide a reason why there's a 0 withholding. So in this case, the reason they gave was an exemption code 05. So let's take a look at exemption code 05. You go all the way down to the instructions, and then let's see if, okay, so authority for exemption. So here it says 05 is portfolio interest under internal revenue code. Okay, so this makes sense. Okay, and then over here you will see other types of exemptions. Okay, but we are focusing on the 05 here, which is on the form, and it shows here. Okay, so in this case, it's telling me that a Mexican resident receiving portfolio interest income is subject to a 0% withholding, because the internal revenue code itself provides that relief. Okay, they don't even need to rely on the treaty because there's no treaty stuff here. Now, assuming you were doing direct lending and it's not portfolio interest, then you would go to the table. Let's see, you go to the table here again, you look at Mexico, and then you take a look at the interest. Now let's see if we can find Mexico. Now you're not this only does not pertain, it does not only pertain to Mexican resident. If you're from any country that has a treaty, you can come here and use the table. Okay, all you need to know is how, just Google and then you'll find a treaty table. Now, okay, so we look at Mexico. So assuming the income that we just looked at was direct lending, okay, so the law says that if it's direct lending, the treaty provides a 15% withholding according to Article 11.2. Okay, but what we just looked at was portfolio interest, and it's not direct lending, or it's not any interest that's related to business, and so it's not subject to withholding, and that's why you have income code 05. All right, before we move on to the next one, again, I need to answer the final question. Is the individual required to file a tax return in this procedure? Again, there's final return, even though it says 0 withholding, is the final return, is the final taxes paid, 0. And so there's no need to file a 1040 NR. Whatever needs to be reported and paid has already been taken into consideration on this form, and you're not required to file a 1040 NR. You're only required to file a 1040 NR if you think this maybe should have been a direct lending interest from direct lending and it's not portfolio interest, and maybe there's a miscommunication somewhere and this is all reported wrongly, and so you think proper taxes has not been paid, and so you need to pay the proper taxes. Go and pull up the 1040 NR, and then you report the taxes that's supposed to be paid. Okay, but if everything checks out good here, the types of income reported is good and everything is good, you're not required to file a 1040 NR, because with this form and all the declarations here, it means you've paid the final taxes that you're required to pay to the IRS through the withholding agent. All right, so finally, let's take a look at the last country that we have on our list, which is Pakistan, which is denoted by a country code PK. Okay, now I look at this and it says income code 12. So let's take a look at income code 12 and what it is. Okay, we also know that it's saying that there's 0% withholding, and then there's an exemption code 4. So we need to determine what is all these codes are about. So first we go to the income code 12. Income code 12, when you look at it from here, it says other royalties, for example, copyright, software, broadcasting, endorsement, payment, and all of that. So if you're receiving royalties and you're from Pakistan, or you're receiving royalties in general, and it's not motion picture or television copyright royalties, just other royalties, such as those who sells on Kindle or Envato or those. I mean, if you like even AdSense and all of that, if it's subject to royalty withholding, then you're going to see code 12. So let's go to the income code 12. We know it's royalties, and then we also see that the taxpayers from Pakistan have a tax treaty with the US, and so there's a tax rate of 0, meaning that according to the tax treaty, there should be 0 withholding on this royalty income. And then it also says that the exemption code 4. So this, if you don't understand anything at all, you can take a look at the exemption code to see why 0% was withheld. Okay, so you go again to the exemption code, the authority for exemption, and here it says exempt under tax treaty 04. So this is all good to me, but then if you want to double check more, okay, if you want to do further investigation, you can go back to the treaty table I showed you, and then under the treaty table you go to royalties, which is here. Okay, royalties here, and then you go to code 12, which is this one we're talking about, and then search for Pakistan if you're from Pakistan. So let's take a look at it. Let's see if we can find Pakistan. So Pakistan is here with code PK, and then when you search royalties under code 12, now here it is, code 12, 0. Okay, so there should be 0 withholding, which the form is accurately represented that. And if you want to know which part of the tax treaty you're going to find this, it's on article VIII subsection 1 or paragraph 1, whatever it is. Okay, so this is just a simple way of explaining how the 1042S works and where to look for and how to find your information, and then check to see if the proper withholding is done and everything is good. Okay, now again, final question: is this taxpayer required to file any tax return, do anything with this form? The answer is that the taxpayer must keep this form for his record in case something happens in the future. But if this is the only income this Pakistani taxpayer is receiving, which is royalty income, and it's subject to 0% withholding based on the Pakistan and the US tax treaty 0%, then this person is done with his tax obligation in the US. He's not supposed to file a 1040 and all is good. Okay, now what will happen if this person was from a place that did not have tax treaty with the US and they are receiving the same types of income? So let's say if the person, with the example I started at first with Brazil, if this taxpayer was from Brazil and receiving royalty income, there would have been a 30% withholding, okay, and there would not be any exemption code here. So it's important you understand how this form works. So hopefully this helps explain all these 1042s that you guys have been receiving and all the questions that you have on it, because I get them a lot. Anytime someone receives 1042s, they send it to me, they attach it to the email, and they ask me, what should I do with these forms? Or do I have to file any tax returns? Or what do I need to do? And I hope this video answers all of those questions for you. So if you've really enjoyed the video, if you've been educated, please click like, share, subscribe, and I'll come to you with another video. Thanks. Bye.